Going over the market, 1,000 points higher than last Monday's low in the Nasdaq, so about a 1,000-point rally from last Monday's low to this Monday's high, a little bit greater than that. What was interesting is the volume based on the Nasdaq futures. You see in red here in Friday's rally. We had some systems get long in here, but overall the volume was negative. The red represents total selling on the day. And so selling increased right into the close. So as the market rallied higher, the selling increased into the close. Today we have blue, which means there's net buying, but just a little bit of net buying, only 240, 260, right around break even. And so the highs on the blues today, you see there's net buying overall. There's more blue than red today, but it's much less than the net red that you saw on Friday. And all of last week, there's a lot of net red. The price movement indicator that we have seems a little bit, it's only around midday, but much lower than the normal 400 to 470 range that we've seen. I think we're going to be a little bit lower unless we get some big sell-offs here. At the end of the day, it's only around 219 with about, well, there's 3 hours left still, so we could go up to 400,000. The range on the day in the Nasdaq, 14,784, 14,353, so 430 points roughly in that range. And so this is what I want to share with you is this rally looks strong in price, but in volume it doesn't look as strong based on the futures. So futures don't encompass all the buying. There are the individual stocks as well, and so futures could be used as a hedge, and so the futures volume could be down while the price goes up based on the individual equities. So based on the futures, it's not a very strong rally based on volume, in my opinion, and so it could be a counter trend bounce. I want to show you the Fibonacci retracements. So here is the daily chart of the Nasdaq continuous futures contracts back adjusted, and if you look at the Fibonacci retracement, if we continue in this downtrend, we are near a 38% Fibonacci retracement from the all-time highs back in November, and from high to low, you see the Fibonacci retracement is 14,880 area. If you move this back to the highs in, I guess, December 28 highs, 14,831 is the Fibonacci retracement, and if you move it to the turning point right here off the most recent rally. Now if you look at this on the daily chart, this looked like an easy sell-off to capture because it rarely took out the previous day's high. But if you're day trading this, there's a lot of movement in each of those bars, so there's a lot of volatility still. So if you look at this from the most recent turning point on January the 12th, we are at 14,585 is the 38.2%. It's past that. And so the 61.8 will be 15,129. So 14.8 to 15.1 area could be a resistance point based on Fibonacci retracements in this downtrend in the Nasdaq futures. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.